Hello there. At the end of last year, the British economy stagnated. The gross domestic product, the GDP, stagnated in the final quarter compared to the summer of 22, as reported by the National Statistical Office ONS. Within a year, however, the economy grew by 0.4%. Economists had counted on that, and it happened. And in the summer, GDP had shrunk slightly by 0.2%, so that the economy is now just avoiding a slight recession for now. Experts speak of a technical recession when economic power falls 2 quarters in a row. Chancellor of the Exchequer Jeremy Hunt said the data showed the economy was more resilient than expected, but not yet over all dangers. We are not out of the woods yet, especially when it comes to inflation, explained the minister. If we stick to our plan to halve the inflation this year, we can be confident that we have one of the best growth prospects in all of Europe. I don't know what he's drinking, but I want some of that. In December alone, which was marked by rail strikes and bad weather, GDP fell by 0.5% and thus more than the expected minus 0.3%. The economy contracted sharply in December, meaning there was no overall growth in the economy for the last 3 months of 22. That's what ONS statistician Darren Morgan said. In many of the countries first hit by higher inflation, central banks, most notably the US Federal Reserve, have slowed the pace of rate hikes in response to new data. Accordingly, they expect only limited tightening in the US, and while the European Central Bank and the Bank of England are likely to hike rates some more, the US are probably nearing the end of their respective tightening cycles, as well as they are in Europe. Financial conditions have eased significantly on markets' confidence that inflation is being brought under control and that there's little left for central banks to do, and the outlook for growth is now more positive than it was a few months ago. The growth spurt is particularly pronounced in Europe, where concerns about a shortage of natural gas have eased. In fact, the price of gas on European exchanges is now lower than it was 12 months ago. This fall in prices will have a major impact on inflation and real household purchasing power. So experts therefore expect positive growth in the Eurozone this year. The accelerated opening up in China also supports economic optimism, as this process should eliminate any remaining dislocations in the global supply chain and get a key consumer market back on track. In the UK, on the other hand, the outlook remains quite pessimistic, as unlike in continental Europe, wage pressures in the UK are still rising at a relatively high rate. This hinders the disinflation process, and in addition, the effects of Brexit limit potential growth. And therefore, experts continue to forecast a recession for the UK. And the most obvious short-term risk right now is potential friction between financial markets and central banks. While financial markets appear to be anticipating a sharp and sustained fall in inflation, which would pave the way for loose monetary policy in a relatively short period of time, central banks, they remain more dovish. If the coming disinflation is more sluggish and central banks ease monetary policy more slowly than the market expects, financial markets could struggle and the resulted tightening of financial conditions could weigh on growth. The inflation data for the coming months are therefore crucial for future prospects. And so Jeremy Hunt is right with halving inflation would be a good thing. But even if he manages this, the UK is behind the Eurozone because of Brexit and is holding the red light of the G7 countries with regard to growth and coming back on track. And that's something they still obviously don't want to see. And I'll see you in my next video. I'll be back.